Welcome. Thank you for being with us today. We're broadcasting live from Park City, Utah, where I am. And Rob, you're in New York City?
I am actually in Snowmass, Colorado.
Snowmass, Colorado. We're neighbors. Thank you for joining us today. And thank you, everybody, for being here. We know you're there. We can see that you're there. And we encourage you to ask questions as we go along in the chat or the Q&A. We'll get to as many people. We have a bunch of folks coming on today, so please feel free to post them as they come to mind. And today we're have the privilege and opportunity to talk to Rob and Eton Solutions about a persistent problem in the family office space, and is how do you keep track of everything in a way that you can count on and feel comfortable and robust, perhaps rather than on a bunch of spreadsheets, which I admit that we still do. We just had a nice conversation before we hit the start button here. We know a lot of common folks in the space, and so I'm super interested in learning more. Just so you know, we're going to be doing a series of these. If there's anybody that you think would benefit from connecting with Eton or seeing the recording, I think we're going to post it, if it's okay with you, Rob.
Sure.
And you're most welcome to do exactly that and view it, share it, and also connect with Rob and his team if you have any questions or feel like there's a solution here for you. And I'm sure this is said all the time, an Eton solution, maybe. So that was kind of a joke, which is pretty bad. So again, thank you all for being here and sharing a bit of your afternoon with us. And Rob, if you wouldn't mind starting out and saying hello and giving us a little background of how this all evolved, it's super interesting.
Okay, thanks for that. So I kind of started out life as a CPA, as a tax guy at Arthur Andersen and Price Waterhouse, and then got an MBA and CFA, and got into the trust business. Worked first for a small independent trust company called North Carolina Trust that we grew to a $3 billion and sold to the U.S. Trust. And then a lot of you probably know Lorraine Savaras, and I worked with Lorraine and opened the first family office group for U.S. Trust outside of New York. And then one thing led to another. Bank of America bought U.S. Trust. Most of our clients were not enamored with being Bank of America clients, so we ultimately spun out and created a multifamily office called Empathizes, and that was in 2009. Brilliant timing. And when we did that, I had done a lot of work at U.S. Trust and North Carolina Trust trying to figure out how can you make a family office more efficient, create operating leverage, and also reduce the risk that comes along with moving around this kind of money and dealing with these kind of clients. And so I had talked to John Carroll, who was with Family Office Metrics at the time, and was recommended to buy 6 different systems and glue them together and hire people to make sure they're all in sync. And it struck me that I was putting the same exact data in 6 different places and then going to have to keep it all in sync. So we probably very naively thought, well, let's just create one integrated system where we could do this. And we did that for ourselves, for Eton Advisors, for 4 or 5 years, until we realized this is a much bigger project than any one family office could take on. And that's when we spun this out and created Eton Solutions. And today we have about over 400 families on our platform through over 40 clients. Some of those are multifamily offices, 2/3 are single family offices. And the idea is that all the middle and back office work that people do, I used to be in these peer groups with other multifamily offices, and we would get together and everybody was trying to figure out how to do their reporting or how to do their bill pay or how to do whatever it was, all these dozens of different processes. And you had what seemed to me an enormous waste of time that everybody is trying to figure out this middle and back office stuff that's really not going to move the needle for the client, but needs to be done. And so that's how we kind of got started, was let's figure this stuff out at scale and then offer it to other people so that they can focus on investments, estate planning, tax planning, client relationship management, cash flow planning, et cetera.
So you mentioned something that helped me to connect the dots of doing what you just said, and that's the 4 different components where the same data is used. Can you talk a little bit about that?
Yeah, if you think about the systems that you typically see in a family office, you've got a general ledger, you've got a document management system, you've got a CRM, you've got an investment performance reporting engine, you have a partnership accounting system, you have a tax reporting system. And if you think about all those systems, basically what you have is you have transactions in all of those systems, and those transactions have to be classified one way or another, depending on what you're doing. And then you have prices or valuations. And once you roll up those transactions to know how much of this thing you own, you price it, which gives you your holdings. And then those holdings would be classified one way for a balance sheet, a different way for an investment asset allocation report, different for a partnership allocation report. And then you have all the demographic data that you need to keep for a family office. So it matters whether an asset is held in a, individual's name, a Roth IRA name, a IRA, a family partnership, a GRAT or a trust. And there's all kinds of planning that people like me used to do to figure out, when I see certain patterns of data, there's something I should be recommending to the family. But so basically you have transactions, valuations, and you have all this demographic data, and it's being stored in all 6 of these different systems. And so my idea was, let's just store all that data one time. And if I have a transaction, I can put a tax classification on it. I can put a general ledger classification on it. I can put an investment roll forward classification on it. And it eliminates the job of reconciling all of those transactions between 6 different systems. And when we were at US Trust, we had about 7 of these systems. And the real frustrating part came when, the data in one system was held at a certain level of granularity. The data in the other system was at a different level of granularity. And when you have that and things get out of sync, it's really hard to figure out why. In our system, everything is kept at the same level of granularity. So every time there's a dividend in the investment system, there's a journal entry for that dividend. There's no summarization, which allows the computer then to make sure everything's in sync. I don't need to pay a really expensive CPA to make sure everything's in sync. I can just write a query and have the computer tell me, yes, the ABOR and the IBOR are totally in sync. But once you store that data at different levels of granularity, that becomes harder for the computer to do.
And then it sounds to me like it just ports it out to where it needs to be when it's properly tagged.
Exactly. And then what we do is we take so there's kind of the normal processing where all of that comes in. So as transactions come in from the custodians or the banks, they go through a pretty sophisticated business rule engine that tags them and classifies them for these different purposes. And then all of that data, ultimately, with a lot of other data, gets fed into what we call an integrated data model that's inside of Power BI. And then I can take that Power BI, and we have a client portal and a mobile app. And all of that data is then available through the client portal and the mobile app, so that the family member can see on a daily basis where they stand from an investment point of view, an accounting point of view. That mobile app also has functionality where the family member can securely message the office, send in a bill to be paid, send in a capital call to be paid, ask a question, receive their tax returns. We're working on building an e-signature to that. Also, if the family office needs an approval from a client or from an executive within the family office, that can all be done through the mobile app and the client portal. And so having all this integrated together, you know, people ask me, what's the evolution of family offices? And I, you know, 50 years ago, everything was in paper, and then it all got into spreadsheets and Word documents. And then you had point systems where you have a document management and investment ledger, you know, performance reporting, a GL, et cetera. Today, we're in the kind of the integrated platform era, which is what we're trying to do. And of course, tomorrow, I'm sure everybody on this call is reading all kinds of articles about Chat GPT and AI, and you know that's the other. I think, you know, this is going to change a lot more in the next 5 years than it's changed in the last 20, and so it's kind of interesting.
It's actually interesting and exciting. So the one would argue that what you've done and are doing, and we'll get into this, but I just want to point out that it sounds like having designed that the way you did has allowed you to have this success. I mean, you have an impressive portfolio of, and so there's something or things that have pushed people over the line to engage. And we'll talk about that in a minute, but it's also the, you know, you're catalyzing some of the how family offices are going to evolve and morph into more sophisticated businesses or holding companies or family offices, right?
Yeah, absolutely. And then as I think I said either to you before we started or on this call, when we started this, when we started our, you know, our multifamily office, we were building technology not to generate pretty reports necessarily. We were building it to create operating leverage so that we could add to the number of clients we had without having to add people and add a lot of cost.
Yeah.
And, you know, I've been in these peer groups where everybody is really good at selling or creating or adding new clients. Or if you're in a single family office, you know, as you get down the generations, it just kind of expands exponentially when you get to third, fourth generations. And if you've got good lawyers and accountants, they're constantly creating legal entities for you to gain some kind of an advantage. And the idea of what we were trying to do was be able to expand the number of entities or the number of clients you're dealing with the same team. So create operating leverage. The other thing we were trying to do was create risk control, because if you're dealing with spreadsheets and paper-based workflows, there's a huge amount of risk in that. If you can institutionalize that workflow into a system that will only allow you to do things in a prescribed manner, it allows you to enforce your governance. And a lot of people have great governance policies in a notebook, and then you actually go and look at what was happening. When we first started Eton Advisors, I created all these rules about how we would do trades and how we would do bill pay. And then something went wrong. We sent $15 to the wrong place, and it kind of scared me. And so I sat down with the team doing the work, and the process they were following was so totally different than what was in the governance manual. You know, it really drove home the point that if you don't have a way of enforcing your process other than hoping people are following it, that's a risky way to run the business. So those were the two key things we were trying to do. Obviously, as we evolve, having great reporting and pretty reporting and all, you know, daily access to the data for the family members and all that became important as well. But creating that operating leverage and being able to grow without really expanding the cost was the key driver at the beginning.
But wouldn't that also apply to one of you could demonstrate return on investment, because the family office itself would have operating leverage because now they had good data they could count on.
Yeah. Yeah. I think, you know, a lot of this, having gone to MBA school and you learn about, you know, business process reengineering or lean principles. And I think for a lot of family offices, all of that kind of business evolution just kind of passed by the family office world. And the idea of only doing something once, and, you know, when I get a transaction in, have the system automatically coded for investments, tax, GL, all of that one time, and I'm done. versus, it's the idea of when I pay a bill, do I do all the classification as I'm paying it? Or do I wait until the end of the month? Like we used to, the client would pay all their bills, send us a spreadsheet. You'd have to go through each one and classify it. And that work is being done by a really expensive person. Whereas if you do it on the front end, you can do it with a pretty inexpensive person. But, those are the kinds of things where just applying normal business practices that are used in every other industry to the family office is important. And I think, one of the things everybody says is, well, if you've seen one family office, you've seen one family office. Totally agree with that with respect to investment strategy, relationship management, family dynamics, maybe even their estate planning is somewhat unique and their tax planning. But,
Data is the data,
makes sense.
right?
Doing data aggregation 15, 27 different ways or paying bills, there is a best practice for all this middle and back office stuff that doesn't really impact the client experience. And if you can leverage that, it's critical. I was actually on the phone today with another multifamily office that I've known for years. And they have about twice as many clients as Eton Advisors, and they have 48 people. Eton Advisors has 12 people.
Yeah. Wow. Impressive. Yeah. What is this is a narrative that I've heard regularly through the years, and still that, yeah, I'd like a robust system that is automated and doesn't require me to have multiple tabs on a spreadsheet and a $350,000 person making sure that the pattern recognition to just see a red flag isn't just up to them.
Yeah.
And then try to look at the formulas and see where the mistake was. And, what gets people over the line to take on what arguably has been the daunting task of going from those spreadsheets that have issues to, doing the work to evolve into a system like yours?
Yeah, I think it's two things. One is you have to show them what the others, I kind of think about it like crossing a river. If you're going to cross the Amazon, for example, and maybe you're on one side that's not a pleasant place, and the other side is a very pleasant place. So you have to, demonstrate that the new world, if you can get there, is much better than the old world. And what most people say is, if it's not an order of magnitude better, you're probably never going to get people to move.
Yeah.
The other thing is you have to show people that there is a solid boat that's going to get them across the river. So we've spent a huge amount of time and energy working on implementation methodology. So I have to be able to walk and sit with a prospect and say, here are the 927 things that will happen in the next 3 months to get you from where you are to where you're going. And here are the 15 people that are going to do those tasks for you, so that we're not asking a client to take on a massive project in addition to their job that they already have. And so what we did, we hired a team of people that spent 25 years doing business process outsourcing to manage that implementation methodology for us. I'm a CPA and a CFA. I know how a family office works. I don't know how to manage a very large implementation project. These people, that's all they do. That's all they've been doing for 20 years. And we have all the people leading those teams are ex-Big Four CPA, CFA types who are then managing a team of people who we have a whole team. All they do is your chart of accounts migration. You have another team that does your security master migration. We have another team that just does document management migration. And there are about 12 of those different streams. But it's, 3 years ago, if we did this for a couple $2 billion family office, it would take us 9 to 12 months. Today, we can do it in about 3 months. And it obviously depends on the office themselves. But I think to answer your question, to get somebody to move, you have to prove to them that not only is the place you're going better, but the journey to get there is not going to be too painful.
So incumbent thinking oftentimes with family offices is I have to attach a ROI to everything, right?
Mm-hmm.
And so if I continue to pay a handful of people to do the spreadsheets, I know it's costing me X. If I go across the river in a boat and the other side is better, how do I attach an ROI to that? And I'll just say that I think that most people can feel comfortable in knowing that money's just a tool to use it to solve a problem. So maybe it's not just about the return on investment. So it's really interesting, right? What have you been able to do to either attach an ROI or demonstrate that it's more
So
pleasant?
in a commercial environment, so a multifamily office where they're
Yep.
They're in business to make money. Typically what we can do is say, look, for you to deliver the exact same things to your clients, using your existing methodology or using a new methodology involving our technology. If you have 48 people today, you can deliver the exact same experience with 30 people, 36 people. In that world, 12 people versus what the software is going to, it's a no-brainer on the ROI.
Yeah.
In a family office, that's never what happens because nobody's going to fire people that have been working for the family for 5 years or 10 years. And so what happens there is typically the ROI isn't in terms of the dollars and cents that are going to be saved. It's in terms of today, your family members get a report once a quarter, 35 days after the end of the quarter. Once they migrate, they'll be able to see their net worth on their phone every day, and it's constantly updated. So what's happening in that world, in the single family office world, is two things. One, your people are probably doing things that they're very much overqualified for, and they're probably things that are much better suited to a computer than a human.
Yeah.
So we can move that work from your people to the computer, which frees up your people to do more value add, more relationship management, more analysis planning, whatever else they need to do.
Deal flow examination. Yeah.
Yeah. And estate planning, looking at the data to figure out, oh, I put this property in a GRAT 2 years ago, it's tripled in value. Maybe I should substitute cash and start a new GRAT.
Yeah.
People are so busy just trying to get the data right in the old world that they never have time to really do that analysis. So in the single family office world, it's usually getting rid of some very mundane like data aggregation, the first step of bill pay, other thing, updating the value of your alternative investments, all of that stuff, generating reporting, loading that reporting into a client portal where your client can actually access it. It's more about improving the client experience for a reasonable amount of money than it is about, I'm going to go in and convert this from a 25-person family office to a 15-person family office, because that just is rare in what's basically a nonprofit single family office.
That totally makes sense. Yeah.
But it's usually about, the dramatic upgrade in what the end client can get, or eliminating some significant costs that they have in terms of other software, or maybe they're paying a third-party provider to do their partnership accounting and it's incredibly expensive, and we can do that for them for a third of the cost or whatever. So it really does depend on each unique situation that we run into. But I think the other thing that's interesting here is, a lot of what happens in family offices today is being managed with email or other, and you've got all this data in all these different places that's not very controlled. And so the other aspect that we see a lot is people are getting really concerned about cybersecurity, disaster recovery, business continuity. How do I operate virtually when I've got people in Scottsdale and people in Park City and people in Chicago?
Yeah.
You know, that's very hard to do in a spreadsheet world. And the other aspect of it is that I think what you're really going to start to see with this AI stuff is different families are going to have very different experiences with their family office. And, you know, your 28-year-old family member is going to be talking to another 28-year-old family member and say, why don't I have what they have?
Yeah. Yeah.
And we see some of that.
FOMO could set in.
Oh, yeah.
Yeah.
But I think the fear of, and rightly so, of
Just cyber. Yeah.
cyber disaster recovery, all of that. And how to, you know, the other thing we see all the time are people that are the person running the family office. A vast amount of the knowledge of that family is in that person's head, and there's really nowhere to store it. And so by
Mitigate some of that risk of,
because people, oftentimes these guys these ladies or gentlemen want to retire, and they really feel like they can't until they find a solution that kind of brings that institutional knowledge into a place where other people can access it.
So one of the things that I personally experience, and I'll do deference to your being a CPA, is that there'd be times where the taxes would be done and there would be no insight on what to do with that. Meaning, okay,
Right.
Before I do this, I've got, you used a GRAT as an example, it probably reveals things if it's in your system sooner than you would otherwise see a pattern evolve that might require some tax planning before the year end. That seems like could be a huge ROI.
Absolutely. And I think this is something that people miss, but when I was at Price Waterhouse, I was doing international tax work, and people would come in at the end of the year and bring me all their stuff and tell me everything they did. And of course, at that point, there's nothing you can do about it. Right. It's already done. And so one of the key ideas we had at Eton Advisors was we're going to pay all the clients' bills for them for free. The reason was, if I know what's happening before it happens, I can add a huge amount of value to the client. So as an example, client puts in a bill to pay American Red Cross $50,000. Well, I can set up a business rule in the system that says, anytime a payment over $500 is going to charity, run it by the tax person or the relationship manager. And then they can call the client and say, hey, wouldn't you rather do this with stock, with low basis stock?
Yeah.
Or anytime a client's making an investment, run that by their wealth manager. And, let's say the client's really excited about a new deal they're going to invest $5 million in, and they're going to put it in their own name. Well, you should at least have a conversation and say, why don't we put this in the generation skipping trust, right? I don't want to just create all this additional value inside your taxable estate when I can move it out. But if you can have a system that's smart enough to route the 10 out of 1,000 transactions that need to be reviewed by these people to them, you're going to be able to add a lot of value. Another kind of on the opposite end is, if you're going to have a deposit to a generation skipping trust or a deposit to a qualified plan account, run that by a tax person, because if you get it wrong, it's really painful to unwind it. Right? Well, that's really easy stuff to do in our system. Is you just have an extra step that says, if you meet this criteria, then I want the wealth manager or the tax person or whatever role to review that before we release that transaction. And so that allows the family office to be more in the proactive mode of planning versus finding out about things after the fact. And then, there's not much you can do about it, or it's just more work to get things where they need to be.
Unravel a mistake. Have you found that the incumbent methodology of paying those bills, in your example, the charitable check, that it just goes unnoticed?
Well, I mean, you have one of two problems. Like when I was at US Trust, we had literally people making $400,000 approving every bill pay transaction for this billionaire family. And the reason was they understood even 15 years ago, we want to be in the loop before things happen. And then this was a CPA JD person, very experienced. And so if she saw something that, could be done better, she would bring it up to the family. The problem was she had to see all 1,000 transactions.
Oh, ouch. Yeah.
So she spent literally half her time doing the bill pay for this $1 billion family. And, that's really a huge waste of time of somebody of that caliber. With the system, you can say, if I have a deposit, which is a transaction type, into a qualified plan or a generation skipping trust, a tax person should look at that. I might have 6 of those in a year out of a sea of 20,000 transactions. Same thing with investments or a payment to a charity where the amount is over $500. It doesn't happen every day. So these people don't need to see I'm paying my power bill or I'm paying the country club bill or whatever. But there are certain things, and that's where the integrated system comes in. Because if you're just paying bills in bill.com, bill.com doesn't know if that account is owned by a GRAT or a irrevocable trust or an IRA necessarily. Having that full integration available to each module in the system is really important.
How about the loss carry forward stuff? Boy, we better sell this and take our hits because we're going to have a big taxable year next year. And how's that? Is that
so the system,
to identify that enhanced by your system?
So you can maintain, the system maintains everything at the tax level. And the benefit there is that, normally you can get that kind of data from a custodian. The problem is most of these clients have multiple custodians. So being able to see that data across multiple custodians. And then, if you're sitting down to do tax loss harvesting at the end of the year, you want to take all your open positions and sort them by which thing has the most gain or the most loss and be able to identify which ones to sell. So we can provide that data to the client to do that kind of analysis because it's all sitting in one system.
Yeah, it's sort of a central depository of data that ports out to where it's needed.
Right, exactly.
Is that fair?
Yeah, I think that's the key thing is you only want to have to maintain one source of truth, and then you can view that source of truth 25 different ways. Another thing is, the other problem with family offices is, as opposed to say endowments have very few legal entities. It is very typical for even a $75 million family. They may have 50, 100 legal entities, and you need to group those legal entities together differently depending on what you're doing. If I am looking at your tax return and you've created a grantor trust for your grandchildren, I need to include that grantor trust in the data aggregation to figure out what your taxable income is going to be. But if I'm doing the asset allocation for that trust, I probably want to integrate it or roll it up with the other assets that the grandchildren own because they are the beneficial owners. You're the taxpayer. Being able to maintain multiple different hierarchies of all these entities simultaneously is another thing that's kind of critical to the operation of our system that you would have never thought of had you not lived with this problem for 25 years.
Exactly. So all this is proprietary, built, homegrown for the most part.
Yep. So it's all everything, and we've over the last 4 years we've migrated so that all of this is now hosted in Azure at Microsoft. It's serverless, it's cloud native. Each client has their own instance of the software, so their data is not being stored with any other client. The client can provide their own encryption keys if they want. So there's all grades of security available. We have a very large investment bank that uses our platform on a white label basis. We have a Big Four accounting firm that uses it. But it is all, for the most part, homegrown and built. We do use Power BI, which is a Microsoft product, for kind of our reporting engine, which gives us a huge amount of flexibility. And Microsoft spends billions of dollars a year making that product better and better. So it'd be crazy for us to create our own
create your own
internal reporting platform. You just can't keep up with what Microsoft's doing there.
So I know at different points in time, you can attribute your success in getting clients in a business development way due to a variety of factors. But presently, what are you finding gets people over the line, aside from what we've already talked about? Anything? The
most interesting thing in this world is how tightly knit it is. There are only 3,000 billionaires in the world. There are only, I think, 60,000 people with over $100 million, and they all know each other. And so client satisfaction and references are really critical. Having somebody say, yes, I've done this, it made my life better, is absolutely critical.
Nothing better than a peer saying that it worked, right?
Yeah. And I think, the other thing that's really helped us, I think, recently is that we did really dramatically improve the implementation methodology. So we shrunk that from, 2 or 3 years ago, 9 months down to 3. And we've done probably 10 of those in that, 3 to 4 month kind of time frame, which just makes the whole project much, much simpler. And over time, we get great ideas from our clients.
Yeah.
We implement those into the platform, and then they're available for new clients. And so the platform is constantly evolving. We didn't used to have partnership accounting. Now we think, the best partnership accounting platform on the market. We didn't have a tax ledger before. We built a tax ledger that just basically takes the same transactions and classifies them for tax purposes, so you can then create a work paper to give to your CPA, to simplify that whole process. But these are all things, we created a trust distribution methodology. We have a client that has one pot trust with 256 beneficiaries. Every time somebody is born or dies, which is pretty often in this family, the allocation changes. So automating something like that, automating partnership distributions, simple stuff like, if I have a family partnership with 20 partners and I'm using QuickBooks, when I make those distributions, I have to make a transaction in 21 different systems.
Right.
And I have to enter 20 different transactions. And in our system, you run one partnership allocation. It tells you how much money each client should have. I've already got stored where this client wants that money to go. So it's like one process to approve all 20 transactions. And when you approve it through, it books the transactions and the journal entries to all 21 entities simultaneously. And if, that doesn't sound that big of a deal, it probably saves you an hour or two. But if you do those kind of things hundreds or thousands of times a year,
not to mention it's likely to be far more accurate and eliminate error, right?
Oh yeah, absolutely.
Yeah. There was a time when
the system keeps track of who owns what. I don't have a separate spreadsheet saying that this is the ownership structure of this partnership. Because the minute I have that in a separate spreadsheet, if somebody makes a contribution or a withdrawal and I forget to update my spreadsheet, well, now something's wrong, right? So in our system, the transactions themselves dictate who owns what, and it's all integrated. And so the system knows who owns what percentage of the partnership, or this partnership is done on a fixed percentage basis, and we use those allocations to do the allocations or the transactions.
How's next generation, and I know that's a all-encompassing group, taking to uh, uh, interface, user experience, the next generation beneficiaries of trusts or family offices, is their behavior different? Is their expectation much different? Is it
I,
driven by what you guys can do?
yeah, I think their expectation is much different. My kids are not coming from a family office, but my daughter, lives in New York, and um, she can look on her phone and tell minute by minute what her net worth is, right? And she has friends that are children of billionaires, and they have no idea because obviously it's a much more complicated task to pull that down. But I think what we see is that, her friend who has a family office can't understand why she has worse information than my daughter who doesn't have a family office, right? And so I think the G3s in this world, if you have, they expect everything to be on their phone. They expect it all to be updated daily, if not minute by minute. And I think that's another thing that's driving people to change, because, if you're dealing with the first generation, giving them a PDF once a quarter probably was okay sometimes, right?
Yeah, sufficient. Yeah.
The 45-year-old probably wants the data accessible more often than that, but maybe not on their phone every day. They're probably okay with a client portal and they get a PDF once a week or once a month. But I think the third, the millennial generation that are being served by these family offices have an absolutely different expectation. They don't want to come in and sit down and have a 2-hour meeting with you. They want to interact with you
Yeah.
via text or secure message.
Yeah.
They don't understand why they need to waste their time to drive to your office to do something,
Right.
And so it is, really driving the technology and driving the people in the family office, because the leadership of the family office knows their clients are not going to be the 75, 80-year-olds forever. And if they, you're really getting a lot of pull from the younger generation that, why don't we have this? Why don't we have that?
Yeah. So you talked about earlier when we were talking about, if you don't have a half a billion or 250 million or a billion, then maybe there's a solution that works for you that isn't, the full blown Eton solution. And we have a question about, do you have a solution for a $50 million family office?
Yeah, so for a long time, most of our clients were $1 billion plus, either single or multifamily offices. And what we realized is that there's a huge need for people that have, 50 million to 250 million. You can't afford really to build a full scale family office. But at the same time, you may not want to be part of a multifamily office where you're kind of locked into their investment strategies, et cetera. And so what we've done is we've created a what we call an administrative family office, which is a solution where we maintain the system for you. We have a team of people that will pay your bills. They'll process your investment statements. They'll do your daily data aggregation. And you, as the client, get the client portal, get the mobile app, get all the outputs of the system, but you don't have to run the system. And because of the structure of that and how it works, instead of taking 3 to 4 months to get up and running, we can get somebody up and running in a month or two. And the cost of that is much cheaper, and it's one single all-in cost for the software, the service, and the implementation. And we launched this in February in Singapore, and we've seen really good traction on this. A lot of people in that 50 to 150 range that want to have all of these services, but don't want to be tied into one estate planning advisor or investment advisor or whatever. They can use whatever investment advisor or CPA or wealth management advisor they want, but they have control over their data. They get all the same software and services that our billion-dollar clients get, but for a fraction of the cost.
There was a time when it was in vogue to grant access to your advisors to your data vault, your documents and all that. Is there permissioning for that sort of thing? And does it still make sense? And
so another thing that, was really important when we were building the software is in a family office or a multifamily office, it's obviously critically important to control not only what somebody can do. So there's really two sides of this. One is what can they see? What can they do? Which modules in the platform are visible to them? They may be able to see a screen, but they don't have an edit button because they don't have permission to change anything on that screen. Being able to control by user, by role, what they can see, what they can do is critical. And even more importantly, for which legal entities can they do those things? So you may have a bill pay person that you want to give access to the system, and all that person can see is the transaction processing for that one client's account, and that's it. So they have like 2 menu items on their system, whereas a normal person might have 30 menu items, and they only see the data for that one particular client. Like maybe you have a property manager who manages your house in Jackson Hole. All he can see is, the data with respect to that house, and has the ability to approve transactions related to bills he sent in to get processed by the family office. And so once again, and then when it comes out to the client, you can very finely tune if there are 280 document content types, which types are internal use only, which types can different client types see. So maybe the matriarch and patriarch can see more. The G2s can see less, and the G3s can see even less. And then you can let your lawyer come in and limit what the lawyer sees just to the particular entities or documents or types. And it's all role-based. So you could have CPAs, lawyers, insurance agents, whatever.
Is that
it's very finely tuned for that?
Yeah. So it's just like tagging permissions, right? By entity, by screen, I know it's more involved than that, but
yeah, the beauty of it though is if I had to, every time I upload a document, say who can see this document, no one would ever do it.
Right.
So it's all role based.
Yeah.
This is a tax return. If I am the CPA on this entity, and this is the tax return for that entity, then I can see that tax return. So nobody has to do anything other than load the tax return. But because you've kind of figured it out ahead of time in this roles-based permissioning, then it becomes pretty easy to maintain that.
Yeah. If there was, is the opportunity to get advice from Eton Advisors as an Eton Solution client still exist?
Eton, the two companies are totally separate.
Yeah.
Their Eton Advisors is one of the biggest clients of Eton Solutions.
Yeah.
But they're totally separate companies. So there's no cross provision of services between the two companies. If you wanted to be a client of Eton Advisors, you obviously can do that. But
you'd come in that door. Yeah.
Yeah. You come in, each door is very separate, and there's very little, there's nobody that really works in both places. Yeah. I'm kind of a board member at Eton Advisors, and I do some things, but that firm's really run by the team there, and I spend almost all my time on the solution side.
In a business development context, is it more often where someone is interested in seeing whether the solution makes sense, and then they have their staff who's running it now do a demo with you? Is that usually how it works?
Yeah, so normally one of the things that's kind of shocked me is we hired some marketing guys a couple of years ago, and we do some LinkedIn and other digital marketing, and we get a huge number of requests in every day where people want to know what we're doing. And these are amazingly from people who are billionaires or their offices and that kind of thing. And so what normally happens is we will set up an intro call. They'll tell us a little bit about themselves, what they're looking for. We'll give them kind of the history of what we do and how we do it. And if that makes sense, then the next step is usually for us to do a demo for them and spend about an hour walking them through how the platform works. And at that point, if they feel like there's a problem to be solved and our system can potentially solve that for them, or our system and services can solve their problem, then we would go into a much more detailed discovery process to really understand their office, how they do things, what they need. And then we would do, a more deep dive demonstration of exactly how we could solve their particular problems.
So we have to run, but I have one last question, if it's okay with you. And this is
Okay.
not meant to disparage any of your competitors, but for example, if I'm plugged in because Merrill Lynch, UBS, Goldman Sachs did my IPO and still stood there at the door and managed my money in their family office, commercial family office, in sort of investment bank in their wealth management. Are those people hard to extract from there? Is it?
You don't need to extract them. So some of those firms, everybody you mentioned is either a client or somebody that we're talking to, because all these firms are struggling with
the tech, right?
Well, I mean, they have their way of providing investment advice and investment reporting and all that is the way they make their money. But what's happening is that most of the people that they're serving want these other services. And this is the reason the multifamily offices are just exploding and taking business from the big players is, it's not easy for UBS to pay your bills because of the compliance requirements, all the other stuff that they have.
Yeah, it's kind of not their fault, right?
No, but I mean,
compliance, yeah.
So these firms are looking for a way to do that. But for example, in this administrative family office we have, if your accounts are at Goldman, that's fine. We just get a data feed from Goldman, bring that data in, we do all the accounting for it. You still have your relationship with Goldman. So you might have money at Goldman, money at JP Morgan, money at UBS. You don't have to disturb any of those relationships to get the benefit of a kind of a global view of your net worth that includes not only what's there, but whatever you have with hedge funds and private equity and your houses and your cars and your boats and planes. That's really the idea. Is what's been missing in the market is a way for you to get your bills paid and your, a holistic view of your net worth without having to consolidate all your assets in one place.
Yeah.
And you can pick and choose your advisors for investments or planning or whatever you want. However, everybody gets to see the same source of truth because somebody's doing your middle and back office work, which is we do no advisory work in Eton Solutions.
Yeah.
It is purely taking care of all of the administrative middle and back office stuff.
So in that case, is in your example where there's a charitable donation being paid, would you alert the advisor at Goldman that maybe there's a better way to do this?
It depends on the client. So the client could say, if this fact pattern comes up, I want you to alert this person, right?
It's
and
hard
whoever
coded
you
in
put
there,
into
yeah.
that, whoever you put into that role is
Yeah.
going to get that notification.
Yeah, it's
It
very
could be
cool.
the client themselves, It could be their CPA, it could be whoever. And that's the beauty of it, is it's highly configurable without being too overly complicated to implement.
Yeah, very cool. Well, this has been super interesting. My business and Family Office Insights is, this is something that we've all struggled with for quite a long period of time. And so I know our audience is interested in learning what they learned today. And then we're going to do a bunch of these going forward. So I really appreciate that. This has really been insightful. And
yeah, I really enjoyed chatting with you. It's good to talk to people who are in the space and really understand the problem. And we appreciate the opportunity to chat and spread the word a little bit.
For sure. Yeah. And it's really encouraging to know that some of the big problems are being solved. So
yeah, and as I told you before I was at a tech founder event yesterday in San Francisco, and the rage everybody there was talking about AI and how it's going to totally transform every industry in the next 5 years. So I think family offices are not going to be exempt from that. That could be a whole nother hour-long topic we could chat about, but I think it's going to be really exciting.
I think that'd be super cool to have your insights on that, especially on the heels of being there with the folks that, presumably are in the know. Yeah. Well,
Yeah.
let's do it. So thanks, Rob. Really, really appreciate it. Looking forward to doing this more. And thank you, everybody, as I always say, for spending with us. The only thing you can't make more of, and that's your time. Till next time. Thanks, Rob.
Thank you. Bye-bye.